Welcome to your ultimate pit stop, Piston Pundit. Buckle up because the latest market meltdown is sending shockwaves through Wall Street and beyond. President Trump's aggressive trade policies have just wiped out a jaw-dropping $1.7 trillion in market value. And some of the biggest casualties are tech giants like Tesla, Apple, and Nvidia. Investors are scrambling as recession fears mount and trade tensions with China, Canada, Mexico, and the EU escalate. Is this just a rough patch, or are we headed toward a full-blown economic crisis? Let's break down what's happening and why it matters. The market crash, how it all started. The U.S. stock market took a massive hit after Trump announced sweeping tariffs on imports from Mexico, Canada, and China during his second term. The goal? To revive American manufacturing and reduce the trade deficit. The result? Panic. Within the first week, the Dow plunged nearly 900 points, while the S&P 500 and NASDAQ dropped 2.7% and 4%, respectively. Tesla felt the brunt of the storm, losing a brutal 15% of its market value, over $125 billion, in a single day. The rest of the Magnificent Seven tech stocks, including Apple, Microsoft, Nvidia, and Meta, weren't spared either, with losses ranging from 2% to 5%. Trump attempted to calm the storm, calling it a transition period, and assuring investors that the long-term benefits of his tariff strategy would outweigh short-term pain. But Wall Street wasn't buying it. Ross Mayfield, an investment strategist, summed it up. The Trump administration seems comfortable with short-term market pain if it helps them achieve broader trade goals. The uncertainty is fueling chaos in the market. The S&P 500 has sunk nearly 9% below its all-time high, and the NASDAQ 100 suffered its steepest single-day loss since September 2022. The financial carnage has left investors scrambling to rebalance their portfolios and wondering if the worst is yet to come. But it's not just the overall market taking a hit. The tech sector, led by Tesla, is facing an even bigger storm. Tesla and the tech sector get crushed. Tech stocks have taken the hardest hit in this market bloodbath, and Tesla is at the center of the storm. Since Trump took office, Tesla's market value has plunged by a staggering $565 billion, making Elon Musk the biggest individual loser in the crash. Musk owns 12.8% of Tesla shares, translating to a personal loss of over $72 billion. Ouch! Amazon and Nvidia also got hammered. Amazon's market cap tumbled by $277.9 billion since Trump's inauguration, while Nvidia's value shrank by nearly 12%, wiping out $403 billion. Overall, the tech sector of the S&P 500 fell 4.3%, its worst performance in over a year. Market analysts point to Trump's unpredictable tariff strategy as the main culprit behind tech's meltdown. Dan Ives from Wedbush Securities called it a perfect storm: tariffs, tech weakness, and economic uncertainty. Musk's reaction was predictably blunt. "We can't plan for chaos," he tweeted, highlighting the uncertainty Tesla faces. The company is already dealing with slowing sales and production headaches, and now the tariff blow has added even more pressure. Apple, Microsoft, and Google parent Alphabet also posted sharp losses, further eroding market confidence. The tech sector has been driving market gains for years, but now it's looking more like an anchor dragging everything down. But it's not just the tech world feeling the pressure. Trump's escalating trade war is fueling even more uncertainty across the board. Before we venture further, we'd appreciate it if you could hit that like and that subscribe button. This supports us in connecting with more auto aficionados just like you. Now, let's change lanes and navigate towards our next point: Trump's trade war with Canada, Mexico, and China. The market turmoil is directly tied to Trump's escalating trade war with America's biggest trading partners. After imposing a 25% tariff on imports from Mexico and Canada, and doubling tariffs on Chinese goods to 20%, the backlash was swift and painful. Canada retaliated with $21 billion in tariffs on American exports, including fruits, vegetables, and liquor. Mexico responded by raising tariff rates on U.S. goods to match Trump's increases. Meanwhile, China imposed a 15% tariff on American coal and liquefied natural gas, LNG, and slapped 10% tariffs on crude oil and agricultural products. Peter Orszag, CEO of Lazard, warned that the trade war could push the U.S. into a full-blown recession. The markets hate uncertainty, and that's exactly what Trump's tariff strategy is creating. But Trump remains defiant. In a recent statement, he insisted, "We're bringing wealth back to America. This is how you win." The problem? Investors aren't feeling like winners. The uncertainty surrounding Trump's trade policies, combined with the fragile state of the global economy, is making Wall Street jittery. And now, the political fallout from this economic chaos is becoming impossible to ignore. Political fallout and economic concerns. The political fallout from the market collapse has been swift and intense. Democratic Senator Elizabeth Warren didn't hold back, accusing Trump of playing with fire and putting the American economy at risk for political gain. Even some Republicans have started to voice concerns. Senator Rand Paul remarked, "When markets tumble like this in response to tariffs, it pays to listen." Commerce Secretary Howard Lutnick defended the administration's approach, insisting that the tariffs were a necessary step to protect American businesses from unfair competition. But the political blowback keeps growing as the stock market struggles to find stability. The bond market is flashing warning signs too. The yield on the 10-year Treasury bond slid to 4.2%, reflecting growing fears of an economic slowdown. The Wall Street Dollar Index also dropped to its lowest point since early November. Overseas markets weren't spared either. Japan's Nikkei 225 tumbled 2.5%. Taiwan's TAIEX fell 2.5%, and Hong Kong's Hang Seng Index lost 1.5%, all showing how interconnected the global economy is when the U.S. market sneezes. Recession fears are mounting. Goldman Sachs raised the odds of a U.S. recession within the next 12 months from 15% to 20%, while JP Morgan Chase increased its estimate from 30% to 40%. Investors are watching closely, and the market's next moves could determine whether this downturn is just a rough patch or the start of something far worse. So where do we go from here? The market's next chapter could decide the fate of the global economy. What's next for the market and the economy? Investors are keeping a close eye on several key indicators that could shape the market's future. The upcoming inflation report and the Federal Reserve's next move on interest rates will be critical factors. Any misstep could send markets further into the red. Corporate earnings are also under pressure. Delta Airlines recently slashed its profit forecast, pointing to worsening economic conditions and trade tensions. If more companies follow suit, the market downturn could accelerate quickly. Economic strategists are now advising Trump to ease up on tariffs to prevent further market instability. Kevin Hassett, president of the National Economic Council, acknowledged the risk. "There are reasons to be optimistic," he said, "but the data suggests trouble ahead." Meanwhile, Ross Mayfield from Baird warned that uncertainty remains the biggest threat. "Markets hate uncertainty more than anything else," he explained. "And right now, uncertainty is all we have." Verdict: a fragile recovery or more pain ahead? The U.S. stock market is teetering on the edge. Trump's aggressive tariff strategy has erased $1.7 trillion in market value, leaving investors rattled and the tech sector battered. Tesla's historic drop reflects just how vulnerable the market is to trade-related shocks. Retaliatory tariffs from Canada, Mexico, and China have only added fuel to the fire. With recession fears mounting and the Federal Reserve under pressure to act, the market's future hangs in the balance. So, what do you think will happen next? Will Trump double down on tariffs or negotiate better terms with trading partners? Or are we heading toward a deeper downturn? Can Trump's trade strategy bring long-term prosperity, or are we facing an unavoidable recession? Let us know in the comments below. We want to hear from you. If you enjoyed this breakdown, make sure to subscribe to Piston Pundit and turn on notifications so you don't miss the latest updates on the market and the auto industry. Thanks for tuning in and see you in the next video.